Hello dear students, today we are going to solve another problem on cash flow statement. Now if you look at this particular problem, given below are the balance sheets of VXL Limited as at 31st December of 2 years as are given below. So first thing that you need to understand here is, in the previous problem, the preceding year was given first and then the succeeding year was given. But in this particular problem, it's the reverse. First, the succeeding year, that is the next year, is given and the previous year is given after that. So you have to be very careful when you are solving such problems. So see where are the years given. So first is 2019 and then is 2018. So be very careful. Now, first assets are given, cash balances, then trade debtors, inventory, land, plant and machinery, total. Then trade creditors are given, debentures, provisions, equity share capital, retained earnings, and total is given. And they have also said that cash dividends of 25,000 paid during the year. You are required to prepare cash flow statement on indirect basis. So this is the question that has been asked to us. Now let's begin with the solution for this. I've already told you, I've given you certain points about preparation of cash flow statement. I'll just repeat them once again. Current assets and current liabilities will go in the operating activities. Current assets and current liability will go in operating activity. Next, fixed assets will go under investment activity. Fixed assets will go under investment activity. And then your fixed liabilities will go under financing activity. So these are the three things that you need to remember. Current assets and current liability, operating activity. Fixed assets in investment activity, and fixed liability in the financing activity. Now when asset increases, it is outflow. When asset decreases, it is inflow. When liability increases, it is inflow. When liability decreases, it is outflow. So you have to remember these points as well. Now let's begin with the solution. First, prepare the format of a cash flow statement. So what all things are there in the cash flow statement? We have serial number, particulars, amount and amount. So first write down, first, cash flow from operating activity. Under that the first item is current year's profit. Let us not write down the amounts right now. First let us prepare the format. So cash flow from operating activity, under that current year's profit. Then write add cash inflow and leave some lines after that, and then less cash outflow, leave certain lines after that. Then go ahead with the second point, that is cash flow from investment activity. Then write down add cash inflows and leave some lines after this, and then write less cash outflows. After this, the third part is your cash flow from financing activity. So write down 3, cash flow from financing activity, add cash inflow, leave some lines after that, and then add less cash outflow, leave some lines after that. Then your fourth part is net cash flow, that is 1 plus 2 plus 3, that is cash flow from operating activity, cash flow from investment activity, and cash flow from financing activity. Then write down the fifth one, add opening cash balance and the final would be closing cash balance. So keep this format ready. Once this format is ready, then you can just go on inserting the various values that are there. Let us first erase this annotations. it looks clean. So let's start. Now the first one is, let's go as per the balance sheet now. Okay, what is the first thing given to us? Cash balance is given. So where do we take this cash balance? We take this cash balance below over here. Okay, if you've seen here, you have to consider the opening balance of cash. Now what is the opening balance of cash? If you just go back, okay, opening balance of cash is for 2018, it is 50,000. Okay, so that is your opening balance of cash. Okay, so it is 50,000 in 2018. So we have to consider 50,000 as opening balance of cash here. Okay, let's go to the next one. What is the next thing given? Trade debtors. Now debtors are your current assets. So current assets come in the operating activity. Now we have to see whether the current assets have increased or decreased. Now the year is given in the reverse format. So in the year 2018 it was 75,000. In the year 2019 it became 1 lakh. That means your debtors have increased. Debtors have increased. Assets have increased. That means it is an outflow under operating activity. So under operating activity, under cash outflow, increase in debtors 25,000. Now how did we get 25,000? It was 75,000 in the previous year. Now it is 1 lakh. So it has increased by 25,000. Okay. Then after trade debtors, inventory is given. Now how much is inventory? I'll just erase this. Okay, inventory was 1,40,000 in the year 2018. Now it is 1,20,000. That means inventory has decreased. Assets have decreased. Assets have decreased means it is inflow, right? So inflow, and it is current asset, so it belongs to operating activity. So it is inflow. So we write here decrease in inventory. Okay, decrease in inventory 20,000, right? Then land is a fixed asset. Where do we consider the fixed asset? It comes under investment activity. So under investment activity, if you see land, what has happened to land? It was 1 lakh and now it is 80,000. That means land has decreased. Your asset has decreased. Now when asset decreases, it is inflow. So where do you consider inflow? It is a fixed asset, land, so it comes in investment activity, and since it is an inflow, so sale of land 20,000. Now how did we get 20,000? It was 1 lakh in the previous year. Now the land value is, as per the balance sheet, is 80,000. That means it has decreased by 20,000. So 20,000. Next, plant and machinery. Now what has happened to plant and machinery? It was 2 lakh. Now it is 2,50,000. That means plant and machinery has increased. When the asset increases, it is outflow, right? So under investment activity, since plant and machinery is a fixed asset, so it comes under investment activity. Under outflow, purchase of plant and machinery. How much? 50,000. Why 50,000? Because in the previous year it was 2 lakh. Now it is 2,50,000. That means it has increased by 50,000. So 50,000. Once we are done with the asset side, let's go ahead with the liability side. Okay. So under liability side, the first thing given to us is trade creditors. Now creditors are your current liability. So it has to come under operating activity. What has happened to creditors? It was 30,000. Now your creditors are 40,000. Creditors have increased. That means liabilities have increased. When liability increases, it is an inflow. So you have to consider it in operating activity. Under inflow, increase in creditors 10,000. Why 10,000 again? Because it was 30,000 in the previous year. Now it is 40,000. Next is debentures. Now debentures are fixed liabilities. So it has to come under fixed liabilities. So fixed liabilities means it is financing activity. So let's go ahead. Let's see the financing activity. Let's go to the financing activity. And debentures, if you see, it was 1,50,000 and now it is 90,000. That means debentures have decreased. Liabilities have decreased. When liability decreases, it is an outflow. So debentures belong to financing activity and it is an outflow. So we write it as redemption of debenture. Okay, we write it as redemption of debentures and the amount is 60,000. Now how did we get 60,000? if you see, it was 1,50,000 in the previous year. Now it is 90,000. That means it has decreased by 60,000. So 60,000 is considered over here. Next is provisions for depreciation. If you see here, it is provisions for depreciation. Now provisions for depreciation, provisions normally we consider it as current liabilities. So always remember, provisions should be considered as current liabilities, okay, for easy understanding. So since it is a current liability, it belongs to operating activity. Now let's see whether it has increased or decreased. Your provisions were 60,000 in the previous year. Now it is 80,000. That means your liabilities have increased. Now liability has increased means it is a inflow. And since it is provision, it belongs to current liabilities. It is considered under operating activity. So provisions for, provisions for depreciation 20,000. Right? So that is how we consider the provisions for depreciation, or for that matter any provision. Next is equity share capital. Equity share capital is a fixed liability. That means it comes under financing activity. So under financing activity, first we have to see whether it has increased or decreased. So if you see, your fixed share capital was 2 lakh in the previous year. Now your share capital is 24,000. That means your share capital has increased. And when the liability or share capital increases, it is an inflow. Okay, so share capital belongs to financing activity and it is an inflow. So under financing activity, cash inflow, issue of equity shares 40,000. It has to be added. Okay, after that, retained earnings. Now this is a very important point. Please pay attention. Okay, I have told you, in operating activity, the first thing that we consider is current year's profit. And in the previous problem, we have seen that P&L account was given in the liability side. We found out the difference between the P&L account of 2 years and we wrote it as current year's profit. But in this particular problem, profit is not given. P&L account is not given, but they have given retained earnings. So retained earnings is considered as profit, because whatever is the profit is retained, is what has been assumed, right? So retained earnings should be considered for calculation of current year's profit. Okay, so let's go ahead with how much is the retained earnings in the previous year. 1,25,000. Now the retained earnings are 1,60,000. That means retained earnings have increased. How will it increase? Only when the profit is there, right? So what is the profit? It is 1,60,000 minus 1,25,000, that is 35,000. So your current year's profit would be 35,000. That is from 1,25,000 it has increased to 1,60,000. That means the difference is 35,000. That means your profit is 35,000. So your current year's profit would be 35,000. Now we are done with the balance sheet which is given to us. The entire balance sheet is considered. Now let's consider the adjustment. Now what is given in the adjustment? Cash dividend is rupees 25,000. Okay, so always remember, whenever cash dividend is given, first we have to check whether proposed dividend is given in the liability side of the balance sheet. Now if you see here, proposed dividend is not given. That means we have to consider it now. Okay, so what we have to do, whenever dividend is paid, always remember, first it is proposed and then it is paid. Okay, dividend is always proposed and then paid. So proposed dividend has to be first considered under operating activity, under non-operating cash flows, that is cash inflow. Okay, so first thing that we consider is proposed dividend is 25,000. So first we have to propose it. So it is 25,000 proposed dividend. First we have to consider that. Add, under operating activity, add cash inflow. Under that we have to consider proposed dividend. And then the dividend would be paid. Now dividend paid is related to financing activity and it is paid, so it is outflow. So under financing activity, if you see here, payment of dividend 25,000 is considered. So whatever is proposed is paid. So this adjustment has to come twice. One as proposed dividend, another as payment of dividend. Proposed dividend will come in operating activity under inflow, and dividend paid will come under financing activity under outflow. So this is how we are going to adjust the or we are going to consider the adjustment. Once this adjustment is done, then we have to take the totals. Now how do we total it? We have the current year's profit. Now these have to be added. So 10,000 plus 20,000 plus 20,000 plus 25,000 gives you 75,000. So 35,000 plus 75,000 is 1,10,000. From that we have to deduct your outflows, that is 25,000. So 1,10,000 minus 25,000 gives you 85,000. So what is this 85,000? 85,000 is your cash flow from operating activity. Okay. Then we have to close the investment activity. So cash inflow is 20,000. There is nothing else. So 20,000 outside. Cash outflow is 50,000. There is nothing else again. So 50,000 outside. So 20,000 minus 50,000 gives you minus 30,000. So your cash flow from investment activity would be minus 30,000. Okay. Then coming to the financing activity, first take the cash inflows. There is only one cash inflow, that is 40,000. So take it outside, 40,000. Then cash outflow is 60,000 plus 25,000, that is 85,000 is your cash outflow. So 40,000 minus cash outflow, that is 85,000, gives you minus 45,000. So your cash flow from financing activity would be minus 45,000. Okay, so your cash flow from operating activity is 80,000, cash flow from investment activity is 30,000, and cash flow from financing activity is 40,000. Now we have to take the net cash flow. Now how do you take the net cash flow? Net cash flow is nothing but 1 plus 1 plus 2 plus 3. So 85,000 minus 30,000 is 55,000. 55,000 minus 45,000 is 10,000. So your net cash flow would be 10,000. I hope you're clear with this calculation of 10,000. I'll just repeat it once again. 85,000 minus 30,000. Why minus? Because cash flow from investment activity is minus 30,000. So 85,000 minus 30,000 is 55,000. 55,000 minus 45,000. Why minus again? Because financing activity is again minus 45,000. So 55,000 minus 45,000 gives you 10,000. So your net cash flow would be 10,000. Okay. To that we have to add the opening balance of cash. Now opening balance of cash has already been given to us. If you check the balance sheet under asset side, opening balance of cash is given to us. Okay, it's over here. Now what is the opening balance of cash? It is 50,000, which we have already considered down, right? So 50,000 is the opening balance of cash. To that we have to add the net cash flows. So 10,000 plus 50,000 gives you 60,000. So 60,000 becomes your closing cash balance. Now this 60,000 should tally with whatever is given in the balance sheet. So if you check the balance sheet, what is the closing balance? If you see here the closing balance, it is tallying 60,000, and here also your closing balance is 60,000. That means your problem is correct. So your closing balance, whatever answer you get, should tally with whatever is the closing balance given in the balance sheet. That is cash balance in the balance sheet. So that is 60,000. So this brings us to the end of this particular problem. I hope you're clear with this problem. Thank you.